First up today, we have Bubs Australia, trading under the ASX code BUB with a market capitalisation of 130 million. Bubs Australia is on a mission to nourish new generations of happy bubs with clean label nutritional products that provide the foundation for setting up a lifetime of good eating habits. Joining us today is Bubs MD and CEO, Reg Weine. Welcome, Reg, and over to you.
Thanks, Paul, and great to be here. Before we get into the slide presentation, I would like to draw your audience's attention to our disclaimer on page 2 of the presentation and now on the screen. The agenda and content for my presentation today will firstly cover the Bubs investment proposition or the investment thesis. I then want to discuss Bubs domestic market performance, which I think is really important context for our global ambition. I'll then move on to the Bubs strategy and the significant progress we have already made against Bubs' 5-point plan to responsibly manage capital and maximise shareholder value. I'll then briefly do a recap on the H1 FY24 results, and then I'll bring it all together with our progress to date and our outlook. There are 6 key ingredients that I feel make Bubs a strong investment proposition and that also contribute towards our competitive moat. Bubs has a large and growing addressable market worth more than $100 billion US. We're a capital-light business with significant operating leverage, and I'll talk a bit more about that later on. Australian provenance and access to high-quality dairy ingredients remains a strength. Our Bubs brand portfolio and product portfolio is differentiated and distinctive. Bubs revenue in the US is growing at 102% year on year, where penetration of our goat infant milk formula is very low, providing a long runway for sustained growth. And we are the only Australian FDA-approved infant formula manufacturing facility with permanent access to the US market expected in 2025. In terms of the Australian market, as you can see on this slide, Bubs is the clear market leader in goat formula in the Australian market, where we hold a 52% share of the category and where our portfolio share of the total IMF market, which has been increasing steadily, now sits at 5.3%. In the Australian infant milk formula market, Bubs is a bigger brand than Bellamy's, and we are currently growing 3 times faster than the category. Goat milk represents about 6% of all infant milk formula sales and is growing strongly, with many consumers looking for an alternative to cow milk and a formula that is gentle on the tummy. Moving to strategy. In July of last year, we announced our strategic review and our simple but achievable 5-point plan to responsibly manage capital and maximise shareholder value. I'm pleased to say we have made outstanding progress against each of our strategic pillars. Looking at each strategic pillar in a little more detail, the US remains our big bet and our growth engine, and represented 46% of total group revenue in H1 FY24, up from 40% in FY23. As you can see from the bar chart on the bottom left, we now have a track record of very consistent and strong growth in the US market, and we expect this growth to continue. But as you can see from the pie charts on the right, Bubs does enjoy a good geographic spread, and we see further upside in Australia, China, and the rest of the world, not just the USA. As many of you already know, Bubs was granted a unique opportunity under the US Enforcement Discretion and Project Fly formula in 2022. And the company has made the most of this opportunity with broad distribution right across the US. We're well distributed across almost all of the major brick and mortar retailers, and we're stocked in approximately 5,800 outlets right across the US from the West Coast to the East Coast. Importantly, we have just gone through the major retailer range reviews with Walmart, Target, and Kroger, the big 3. And Bubs has increased our store count in each major account. And that's based on our category performance and velocity during the review period, which is great news and demonstrates the strength of the Bubs brand. Beyond the current retailer footprint, we do have additional channels and retailers to pursue that could significantly increase our distribution points in the US. But for now, we remain very focused on executing on our current retailer footprint and partnerships and driving velocity for the moment. The graph on the top left is our scan sales revenue growth by quarter achieved in both brick and mortar retail outlets and on the Amazon platform. And importantly, because it's scan sales, it represents true consumer demand and is not just pipe fill or infill or what we sometimes refer to as ex-factory sales. We couldn't be more pleased with our sales momentum at present, and if anything, we probably could have achieved even higher sales in half one, if not for the supply chain shortages due to the increased demand in the US that we experienced in Q2. But despite those stock shortages in Q2, as you can see, our sales have rebounded strongly. We're now achieving more than 700,000 in US dollars per week in scan sales. That's over $1 million per week in Aussie dollars across the December-January period. And for the last 4 weeks in late February and into early March, we've seen new record sales in Amazon each week. Bubs continues to make meaningful progress to gain FDA approval for permanent access to the US market, which is the second largest infant formula market in the world. Bubs Growth Monitoring Study, or GMS, and clinical trial is now progressing, and we now have more than 200 patients enrolled in the trial. The clinical study evaluates all 3 Bub Stage 1 formulas in the market, including goat milk and our 2 cow milk products, as well as a commercially available formula as the control sample. We continue to make meaningful progress against the regulatory milestones and the FDA transition plan guidance, and we remain on track for permanent access to the US market in 2025. We continue to get a lot of questions from shareholders relating to the cost of the FDA regulatory approval process. It's not cheap, and specifically the clinical trial costs. Hopefully this graph will give you a better understanding of the overall cost and the timing or phasing of that expenditure. As you can see, we've now incurred approximately 63% of the forecast total regulatory cost of 9.9 million, with some significant cost to flow through in this current Q3 quarter before it'll taper off at the end of this financial year. Moving to our second strategic pillar in our China reset. The China market is the world's largest infant formula market, about 40 billion, and is strategically important to Bubs. Although our half one China net revenue of 7.1 million was down 30.3% on the prior corresponding period, we are expecting to deliver full year growth in FY24 versus FY23, probably in that mid-single digit growth area. And we've got a lot of new products ready to launch in Q4. I have no doubt that our performance in the second half of the year will be much improved over half one. And most importantly, I want the audience to understand that our China business today is already profitable. Our third pillar, portfolio optimization. We've moved really quickly to address some gaps in the portfolio, enhance or improve our formulations, and give our packaging and branding a refresh. At the bottom of this slide, those tins are our new look labels and smaller 20-ounce tin. And that 20-ounce tin is ideal for the US market. We'll be launching those tins in Q4 of this year. The changes to our packaging design, very important. They're intended to increase the premium look and feel, make it easier for consumers to discern between our goat offering and our bovine or cow offering, enhance our shelf appeal, maintain our distinctive assets, and importantly, provide a much stronger call out of the product attributes that mums really care about. And we know this because we've done extensive research on the ground in the US. Our fourth strategic pillar was sweating our state-of-the-art facility at Deloraine here in Melbourne. That's where the executive team work from. I'm based here. I'm out here every day. The exciting news is that with the capital raise completed successfully late last year, we did commence our second shift in January, at the end of January, to meet the accelerating demand in the US and other markets. Pleasingly, it was a very fast start up to the second shift, with daily production doubling to 25,000 to 28,000 tins per day. The second shift allows us to service that increasing demand in the US, but it'll also lower Bubs unit costs or cost of goods sold, which is fabulous. Moving on to the last of our strategic pillars and working capital and cost discipline. We are tracking broadly in line with our objective of reducing our cash burn to 2 million per month from Q2 FY24 onwards. Our average for the first half of the year was 2.1 million, so broadly in line, but that included some non-recurring regulatory costs of 2.7 million, litigation costs of 1.9 million, ERP costs of 600,000, and we had air freight to meet that US demand of 1.3 million. They're all non-recurring. If we exclude those one-offs, the normalised cash burn was closer to 1 million per month. The good news is that our assumptions regarding underlying operating cash flow remain unchanged, and we expect to be cash flow positive with positive trading EBITDA in FY25, so not far away. Just moving to a quick recap on our half one financials. When you look at the financial results for the first half, I think they clearly demonstrate the progress we have made in a relatively short period of time. I think they also highlight the momentum that's behind our business presently. Our gross revenue of 49.2 million was up 30% on half one, driven by the exceptional growth in the US, where our sales increased 102% over the prior corresponding period. But even in Australia, our gross revenue was up 15% on PCP. Underlying gross margin was 38%. That's a 300 basis point improvement on half one FY23, and was driven by stronger inventory management, geographic and channel optimization, and product mix. Our operating expenses to net revenue ratio continued to improve down to 53%. That's compared to 78% in half one FY23, and that's due to effective cost controls. And I think this result clearly demonstrates our operating leverage and our pathway to profitability in FY25. I'm also pleased to report that Bubs' portfolio is performing strongly. 75% of our revenue comes from our high-margin infant formula products and our hero goat products, which represented 47% of all sales in half one. And then finally, turning to our balance sheet, we had 27.4 million in cash as at 31 December, and a further 9.8 million in undrawn debt in our trade finance facility. Net cash used in operating activities, including non-recurring items, was 42% lower than the prior corresponding period. In terms of our progress, I think, as I said, we've achieved a huge amount in a short period of time, and our turnaround is definitely gathering pace. I'm pleased that we've done what we said we would do at the outset of this financial year with our progress to date, as we track towards being cash flow and trading break-even or positive in FY25. At the start of this year, we said we'd achieve full-year net revenue of 80 million. That's 100 million of gross revenue, and we're currently tracking ahead of forecast. We told the market we needed our gross margin percentage to be 40%, and we're broadly in line on an underlying basis at 38%, and we would expect half two gross margin delivery to be stronger than half one. I think critically, we continue our meaningful progress on the FDA approval and permanent access to the USA market, and I'm pleased to say we now have 200 infants enrolled in our growth study. At the outset of the year, as we said, we set ourselves a target to reduce the cash burn to 2 million a month from Q2 onwards. Our year-to-date performance is in line with that objective, despite those higher than anticipated FDA costs and the necessary air freight we incurred to meet the growth in demand in the USA. And portfolio optimization was really important to support our revenue and gross margin targets, and we're well ahead of where I thought we would be at this stage, and with the new packaging and new products now launching in Q4 of this financial year. And finally, we've been very clear on our ambition to be trading EBITDA and cash flow positive in FY25, and we remain very much on track. In terms of the outlook, you should expect to see our sales revenue accelerate in the second half of the year, and our year-on-year growth rate will continue to increase now that we've cycled half one of FY23. Bubs will continue to invest for growth in the USA. We'll build on our current momentum in Australia, and we'll stay the course on our China reset to provide a platform for sustained growth. That completes my presentation, so I'll now hand back to Paul for the Q&A.
Thanks, Reg, and plenty of questions coming in. So let's get tucked into those.
Fantastic.
First off, Reg, What factors need to continue driving the US business to sustain its current high growth trajectory? I think you said it grew, year on year over 100%.
Yeah, look, we forecast our growth this year to be 100% over FY23, and we're very much on track, if not slightly ahead. I think there's three critical things that we're thinking about in terms of our ongoing success. The first one is clearly we need to complete our FDA clinical trial to secure permanent FDA approval and access to what is an $8 billion market in the US. We expect that approval to come through in October of 2025, if not before. I think the second critical success factor is really about driving our velocity. That's units per store per week with our existing retailer partners, but also on the Amazon platform, because I think that cements our position for the brand within the category, but it also maximizes what is a first mover advantage. I think people forget we've got this unique opportunity in the US, and we're certainly making the most of it. And then I think lastly, it's about execution. So we need to execute really well. That's how we market. It's our account management with our major customers. It's things like forecasting and inventory management. I think they're the really sort of key things for the next little bit.
I think you've already answered this question, but I'm going to ask it anyway. Do you have enough cash and capacity to fund this growth and momentum?
Yeah, we believe we do. Obviously, it's always nice to have a bit more capital adequacy on the balance sheet, but we did the capital raise that was well supported late last year. We think we can fund our growth, particularly now that we're moving into profitability in FY25. We do have that largely undrawn debt facility of $10 million. We'll dip into that if we need to. We haven't yet. So the answer is we plan to self-fund our growth from here.
And there's a question here asking, is the clinical trial of 400 patients on track in September?
Yeah, so the FDA's transition guideline note suggests that participants should submit their data from their clinical study in October of this year. I'd say on run rate, we're about halfway through the number of patients that we need for the trial. We're probably a little bit behind where I'd like to be in terms of the absolute patient numbers, but it changes daily and changes weekly. We've swapped in and out some clinical sites that we're working with for the trial. We've got 26 sites right across the USA, so it's a very fulsome trial. I'd say we're on track. It'd be nice to be a little bit further advanced with the number of patients enrolled, but we're in regular dialogue with the FDA, and we are making meaningful progress, and that's the key determinant.
And you said earlier, Reg, that you'd had some questions from investors about the cost of those regulatory costs for the FDA, but the cost of those versus the opportunity of that permanent access. I mean, it's a no-brainer as far as Bubs is concerned. Is that correct?
Yeah, I think very few people understand that the US market for infant formula was largely a closed market to foreign brands until the infant formula crisis in the Sturgis plant in 2022, where there was a pathogen, Chronobacter, which unfortunately caused the death of a number of infants in the US and created a shortage. So I think, if not for that and the temporary enforcement discretion that allowed us to get into the US in the first place, and then to penetrate pretty much all of the major retailers and be in roughly 6,000 outlets, quite incredible. We're not only in them, but we're actually performing really strongly. So we're leading the category. There was no goat infant milk formula available in the US, would you believe? Wow. And so if you think about other mature infant milk formula markets around the world, goat is typically somewhere between 5 and 15% of the category. In Australia, it's 6%. In China, it's more than 10%. So, you can see this long runway of sustained growth, of pent-up demand that Bubs can grow into. And I think we're doing a great job.
Absolutely. Another question here. Is there any competitive edge that lets Bubs maintain its growth into overseas markets, given that local US and Chinese competitors could manufacture and distribute product at a lower cost?
Yeah, that's a great question. I think certainly we've seen in the last number of years in China specifically, local domestic brands have really come back fairly aggressively and have done a great job. But I think in the last 12 months, we're seeing foreign brands and international brands take a little bit more share in the category. So I think it's sort of starting to sort of even itself out. I think, look, there's always going to be competitors, be them domestic or internationally. I think we've got this first mover advantage in the US, and back to the clinical trial. that's a significant barrier. I mean, there's the 10 million that we're obviously expending on that project. There's the duration of the trial. You have to have your factory approved by the FDA, which Bubs has. So, it's a lengthy process, requires a lot of capital. And even if you get through that trial, you then have to invest behind your brand. So in my mind, crudely, I'd say that opportunity in the US, it's worth $100 million. If we were starting tomorrow and wanted to penetrate the US market, you'd want to set aside that level of investment and be prepared to stay the course for probably, 3 to 5 years before you get a return on that investment. We were gifted this one-time opportunity, so I think it's very unique, very different for Bubs. And as I've said a couple of times, we're going to make the most of it.
Yeah, you certainly grabbed the opportunity with both hands, that's for sure. And you talked earlier where your products are sold in the US, Walmart and the likes. What about the US supermarkets? Have you got penetration into them as yet, or is that coming down the line?
So in the US, we've got all of the majors, so Walmart, Target, Kroger, Albertsons. There's a couple of retailers we're not in. Whole Foods is an opportunity. It's owned by Amazon. We're obviously very successful on the Amazon platform. It's a retailer where our brands, I think consumers would expect to find. So we're talking to Whole Foods presently. Publix is another big retailer in the US that we're not in. And then there's pharmacy outlets. Of course, if you look at our domestic business, Chemist Warehouse is a very big customer of ours. And the channel is somewhere that American consumers, just like our domestic consumers, look to shop for infant formula. So, if we went to CVS or we went to Walgreens, for instance, there's potentially another 30,000 outlets that we could stock our product in. So, there's lots of opportunity. But as I said earlier in the presentation, it's about making sure that we demonstrate to our retail partners that we fulfill a role within the category and that we can deliver the returns that the retailers need out of our brands. And so far, we're doing that really well.
All right, just time for a couple more. At present, your revenue profile predominantly centers around infant formula. Can we anticipate expansion into other revenue streams such as nutritional products, adult formula, and raw materials in the foreseeable future?
Yeah, so infant formula is 75% of our total sales, as I mentioned. The balance is really made up by food products, so a lot of the baby snacking products, food pouches, teething rusks, etc. And then we have our adult nutrition product, which is sold under the Caprolac brand. We see that as a really interesting platform going forward. So I think we've certainly got more than one string to our bow. It's really about timing and getting that right. And for the minute, we just want to make sure that we're supporting our core business in those two core markets, being the US and China.
And just one to finish off with, I noticed that you're not currently listed in the US market, and given your substantial revenue profile in the US, do you have any plans to pursue a listing there in the future?
Yeah, look, it's a great challenge. Not for the moment. I mean, we're an ASX listed company. We have 28,000 retail investors on our register. We've now got a smattering of institutional investors, which is great. I think that register will change shape over time as we get on and deliver and do what we say we're going to do. We've got good access to capital here domestically. So for the moment, no need to think about a dual listing or listing in the US.
Good. Reg, it's been an absolute pleasure. Many thanks for taking the time to present.
My pleasure. Thank you for the opportunity, Paul.
Thank you.